A YouTube channel with hundreds of videos ranked 27 trading strategies from S-tier to F-tier based on his experience. Price action and engulfing patterns at the top, moving averages in the middle. So I took every single strategy, coded it, and ran it on 5 stocks over 10 years. His S-tier engulfing pattern? It was our absolute worst performer with a profit factor of 0.62. His B-tier EMA 200 trend? Our number one at profit factor 1.44. Opinion versus data. Let's go through all 27. Here's how I tested this. I took all 27 strategies from one YouTube channel, coded each one with simple mechanical rules, no discretion, and ran them on SPY, QQQ, AAPL, NVDA, and TSLA using daily data from 2016 to 2025. Each strategy uses a 2 times ATR stop loss and a 2-to-1 reward to risk target unless the strategy specifies otherwise. I tracked total P&L, win rate, profit factor, max drawdown, and Sharpe ratio for every strategy on every stock. Let's start with the winners. Our A tier, meaning profit factor above 1.2. Number 1, EMA 200 trend. Buy when price crosses above the 200 EMA. Sell when it crosses below. Profit factor 1.44 and the highest Sharpe ratio at 2.16. The simplest trend-following strategy beat everything. Number 2, ATR trailing stop applied to the MA 8/21 cross. Profit factor 1.39 with a 48.6% win rate. The ATR trailing stop lets winners run while cutting losses mechanically. Number 3, volume spike box. High volume candle with a small body near support. Trade the opposite breakout. Profit factor 1.38, but only 60 trades, so the sample size is thin. The big surprises. MA cross 821 came in at profit factor 1.36, which his channel rated as B tier. Our data says A tier. BB squeeze breakout at 1.22, which he rated C tier. We say A tier. The VWAP pullback at 1.23, a strategy he didn't even rank highly. The data and the opinions disagree significantly. B tier. Profit factor between 1.0 and 1.2. These strategies work, but the edge is thin. ORB breakout made the most absolute money at $6,643 across all stocks, but the profit factor was only 1.17. Momentum. Scoring at 1.16, fib pullback at 1.14, pressure zone at 1.09. These are all break-even-ish strategies that might work in a bull market but would struggle in a sideways or bearish environment. The inside bar single variant came in at 1.05, barely above break-even. Now, the losers. C tier and below. Hammer and shooting star patterns at 0.98, basically break-even. The double inside bar, which we just tested in depth in video 51, came in at 0.95 on daily charts. Lost money. CMF plus 200 EMA at 0.87. The MA cross 50/200, the famous golden cross and death cross at 0.87. Too slow. By the time the 50-day crosses the 200-day, the move is already over. D tier. MA. Contraction 21/55 at 0.79. EMA. Pocket 9/21 at 0.71. BB mean reversion at 0.67. And the absolute worst, engulfing pattern at 0.62. His S-tier strategy, our D tier. It lost money on every stock. Let's put his opinion ranking next to our data ranking. His S-tier included engulfing patterns and volume analysis. Our data says engulfing patterns are the worst strategy tested. Profit factor 0.62. His A tier included the double inside bar. Our data says it lost money on daily charts. His B tier included EMA 200 trend and MA cross 8/21. Our data says these are the two best strategies, profit factors 1.44 and 1.36. His C tier included BB squeeze and stochastic. Our data says BB squeeze is A tier at 1.22. The pattern is clear. Strategies that look impressive in hindsight, like engulfing patterns and inside bar breakouts, often fail in systematic testing. Strategies that seem boring, like following the 200 EMA or a simple moving average cross, actually work because they keep you on the right side of the trend. The single most important finding: trend-following strategies dominated. The EMA 200 trend, ATR trailing stop, MA cross 8/21, and BB squeeze breakout are all trend-following systems. They buy up trends and sell down trends. The reversal strategies, engulfing patterns, hammer and shooting star, RSI divergence, mean reversion, all struggled. This confirms what we've seen across 53 videos now. The stock market has an upward bias. Strategies that fight the trend lose. Strategies that follow it win. The verdict: opinion-based rankings and data-based rankings are completely different. What looks good on a chart doesn't always work in systematic testing. If you're choosing a strategy, don't trust tier lists. Trust backtests. The boring strategies win. The flashy ones lose. And the simplest trend filter, the 200 EMA, beat 26 other strategies. If you want to see more strategies ranked by real data instead of opinion, subscribe and hit the bell. I test every strategy mechanically so you don't have to guess. Drop your strategy in the comments. Data doesn't lie.